Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, November 8th. Okay, guys, welcome. Hope you guys had a nice weekend. I hope you're coping with that daylight savings time switch, messing with your circadian rhythms. I know it's always kind of a little hard thing for me for the first week or so to get used to the new schedule, but it is what it is. Before I get too far along, one of our teammates, Paul, finds himself in the hospital this morning with some health complications. So keep a thought and a prayer in your mind for him today as he copes with that. Hopefully it's nothing major and get back on track here quickly. So be thinking of him. And of course, as always, run your video player at least 1.25x to cruise through this material. Taking a quick look at futures, equities are mostly flat. Oil's up 1.5%. Bitcoin is up an astounding 8.5%. I don't know what's going on there, but really making a jump. On the macro front today, we've got Clarita and Powell talking, but the week after the FOMC, they're not expected to say too much. Looking ahead to this week, we've got a couple of important bond auctions. We've got the 10-year tomorrow. We've got the 30-year on Wednesday, along with CPI, Atlanta Fed expectations, inflation expectations. Thursday is Veterans Day. It's going to be a governmental holiday, but the markets will be open, so there's not going to be any data releases. So they brought forward all the jobless claims, stuff like that, stuff that normally would be happening on Thursday. They're bringing that into Wednesday, along with the nat gas inventory, which is usually Thursday, will be brought forward to Wednesday. And then Friday, we've got consumer sentiment. On the earnings front today, the only big one I saw this morning was the trade desk. And then after hours, we've got PayPal, AMC, Roblox, and Smile Direct. Those were the notable ones that I saw. So let's get into it here quick. It's I don't know if I mentioned it. It's 6:30 as I'm starting the video. U.S. dollar showing some strength, has not broken out of this range, but certainly testing it. There are a lot of U.S. dollar shorts on the books, so there's the potential for a breakout here with a short squeeze. Notice the position of the PPO. This is typical bull market behavior. You get a bull cross near the zero line, you come up, you make a bear cross and roll over in momentum, but price doesn't do a whole lot, and then you get a bull cross again at the zero line. That's a very bullish look, coupled with the fact that RSI never lost 50. So that's bull market behavior. The thing that's got everybody baffled really is the yield curve flattening across the curve. What does that mean? Well, like 2-year rates have risen while 10-year and 30-year rates have fallen. That flattens the curve. We really haven't seen a big detrimental effect in the banks yet. But here's that, I drew in this hypothetical head and shoulders top on rates in the middle of last week, and now we've broken that neckline. So just from a technical standpoint, we could come back here into the 1.4 range, maybe even undercut that a little bit, strictly based on the pattern. And what's so weird about it is the economy's definitely reopening and running hot. We had the news of the, what was it, the Pfizer COVID pill on Thursday or Friday. That sent all kind of travel and reopening, cruise lines, airlines, theme parks. I mean, all that stuff rocketing higher. And so you'd think that that would be a rising rate environment. So everybody's wondering, is this telling us to expect a slowdown? Or is this just a technical move? Hard to tell. But we've definitely broken the neckline here. So just from a technical standpoint, what we may see is that classic breakdown, back test, and then breakdown again. What would kind of invalidate the structure would be if we broke back above 1.5% and just kept going up like this. Then this would be viewed as a whipsaw. But way too early to tell that. We'll just have to keep an eye on it. And of course, then TLT. Remember, we had broken below. Now we came back into the range. And again, just from a technical standpoint, whenever you leave a range and then you come back into that range, the target becomes the opposite side. So just from a technical standpoint, this is playing out just as you'd expect. Once TLT left the range, it came back, and now it looks like it's on its way towards a tag of 152 just on a technical basis. Now there is going to be some resistance here at 149, but I'm just sharing with you the technicals. There was a big jump in VIX on Friday, even though the markets really didn't do much. Remember, we were down in the 15s, and now we jumped up to 16.5. So now we're in the middle of this range. Watch for moves either towards 18 or back towards 1575, and those would be your more or less your pivot points. If we see a move over 18, I'd say more volatility is coming into the market. Probably see quite a bit of red on the screen, and of course going back down, you would see green on the screen. Tends to trade inverse to the indexes. Oscillators, nothing. Still here, elevated, but not extremes. Same thing on the NASDAQ. Equal weighted SPY at all-time highs. We did have this little doji candle on Friday, so that kind of means indecision. You can see that we went up and tagged this 162 area, but could not hold it, and then came back basically to the opening price. SPY 2-hour. I've cleaned this chart up a little bit and dropped in this rising wedge that I've got in brown. And really, I think the thing to watch out for is a break to the downside out of this wedge, and then break down below 464. I think that would, anything below the wedge is going to trigger a technical sell signal. Anytime you drop out of a channel or a wedge like that, it is a technical signal. But that would be even further confirmed with a move below 464. And then you're going to be looking at 462 and then right on down the line. So if there was a spot to watch on the chart as far as SPY goes, I would be watching 464 pretty carefully as far as a place to be concerned about on any kind of downside move. And that lines up really well on the 30-minute chart. You can see we've got this well-defined uptrend channel with a midpoint line, top of the channel, bottom half of the channel, top half of the channel. You break down below 468. That opens the door for a run down to 464, and that aligns really well with the 2-hour chart we just looked at. You come down to 464, check down to the bottom of the channel. If that holds, no problem at all. That's almost what you'd expect. If you were to lose the midpoint here, just come down, have the dipsters pile in at that well-defined support level, and then, back up. So just something to look for. It's not a prediction, just something to be aware of. And then you can see where price on Friday had a hard time at 470. So now, if this holds, because the top of the channel has moved up, your top of the channel comes more or less at 471. So watch for resistance there if we get back up there today. Equal weighted Qs right up here at the highs. We burned through this divergence area on PPO. We also burned through it on RSI, so that looks good. Here's the 2-hour chart. Now, it's a little hard to see. Maybe I should have made it a little more bold, but take note of this thin intermediate trend line in brown here coming up. That's been support on the way up here as we popped out of the main channel. So we've got a little wedge forming here on the Qs. And what I want you to watch out for, just going back to our central tenets, these are things that should be coming, if you've been on the channel a while and been with me a while, just central technical analysis tenets or fundamentals. Now that we've broken out of this channel, if we were to come back in, we've got this thin intermediate trend line here. If we were to break that little wedge, break down below the top of this well-defined channel, then where does your target become? It becomes the bottom of the channel, right? The opposite side. So, breaking below, let's just call it 396, right in there. You've got some support at 395. Then you've got the midpoint of the channel at 392.50. But then you break below that, then you're looking at 390 and then 387. So that would certainly be something, unless you've got a very long time horizon, just sit through. If you broke this channel to the downside, that would be a time, well, certainly if you're trading the Qs, a time to exit or lighten up on your longs. But also, you'd probably see that in all the FATMAAN names as they start to move over, roll over, because they are, 40-50% of the Q index. So the way the FATMAAN goes is going to be the way that the Qs go. All right, 30-minute chart. You just see here, it may be a little bit easier to see, but I've got basically the rising channel, and then with this intermediate wedge type structure with price above everything right now. So I would be watching a move here below 396, 395, and then your next level down, you can see this big void. I would think that would happen pretty quickly just because of this void. So a quick move down to 392, something like that, I think would be in the cards. And also up above, you can see that this whole time we've had a rising RSI and a rising PPO. If you saw price come down, you'd probably see RSI break the 50 and you'd see PPO break the trend line, and then that would kind of be your confirmation, if you will, that the indicators are supporting a move lower in price. I put this IWM weekly chart on the blog site with a few comments there, but I think this is one of the most important longer term charts that we've got right now. I mean, there's probably other ones, but it's one we've been working with, being one of the indexes that we've been working with for a long time. We were trapped below 165 like forever back in 2018 and 2019. We got the breakout in November. This was the COVID vaccine announcement. And then we rocketed higher. And then we've been in consolidation for really all of 2021. And now we finally broke out last week. What's kind of exciting about it is notice the PPO profile. And we talk about this all the time. One, you break above zero, that sends you into bullish territory, the bullish regime. You reach a momentum high, then that momentum rolls over, and you begin this bleed off of momentum. But in price, you're getting a correction in time rather than a correction in price. And so now, after almost a year, we've got a bull cross back at the zero line. And that's one of the most bullish setups you can get when you have a big PPO reset on a longer time frame chart like the weekly. And you can look back, just doesn't happen that often, especially with these nice, clean, sweeping moves. Back here, it was more or less chop. Back in 2018, 2019. Here, we got a big cross here, which ran up from the COVID lows all the way up to the high, consolidation in time, and a breakout. Our measured move, just based on this structure, is 255. But if everything goes the way I think it will go, if we have a good reopening, if COVID more or less disappears over the winter, now that we got these pills and more people are vaccinated, etc., there's no new variant, la-da-da-da-da, this could find 300, I won't say pretty easily, but it wouldn't be a stretch of the imagination. And really what you want to look for, I don't have it here, but relative performance. If you plot IWM against the Qs and against SPY, you'll see if on a relative basis the value sector is starting to outperform. So here it is on the 2 hour. got a rising trend line. We've got a little gap to deal with. I think as long as you hold 240, I think we're going to be in good shape. Below that level, I would imagine come back and fill this gap, possibly even touch the bottom of the channel. But like all the other ones, I think you really want that to hold there if we do need to take a trip down to the bottom of the channel. And here you see it on the 30-minute chart, just give you a little bit more granularity. I want to welcome the new listeners to the channel. I really appreciate you spending some time with me early in the morning, pre-market. What I try to do is set the table for you for the day, give you a lot of key levels and market thoughts to get you in sync with the market as I see it, and then let you drill down on the things that you like to trade, centered on executing around my levels. I think if you do that, you'll get good results. Please hit the subscribe button and the alarm bell and give me a like. That'll let other people know that you're appreciating the content. And of course, longtime listeners, I really appreciate your sticking with me and helping me out by passing the link along to others in your trading circle. So Facebook had a down move, bear flag, another down move. Now we're on the upside. You can see that we recaptured the 50, which is bullish. There are some little gaps here left below, but I think today on a move above 340, 341, you can be a buyer looking for 347. And I just wanted to show you this upper gap that's there, along with the fact that the daily RSI has broken above 50 and the PPO is turning up. I'll give you a quick peek at the 60-minute chart. Here's that gap it's dealing with now. I will put in the upper gap later. I didn't really get to it. I don't know why this hasn't changed. I thought I changed that, but regardless, I think you can be long here against this 342 level right here, and then look for 346 and higher if we have a positive day today. Apple 60-minute, working on filling this gap. I think we fell a little bit shy last week. So today, I think on a move above 150, 150, you can be long, looking for a complete gap fill. And then if you get the breakout here, then you can look for 154. But I think today, it's pretty clear that 150, 150 is going to be your pivot point. Tesla in the news. We got to talk about this a little bit. Elon ran a Twitter poll over the weekend. Should I sell 10% of my stock? That answer came out yes. So that represents about $21 billion in Tesla stock. The stock is down on that news. I had it trading around 1160 down here. You can see that that's a really 1170 is a support level. So there's going to be an opening gap above this morning. So be aware of that. And if that starts a cascade, if you will, because notice we got a big void in the chart with this run up. If you see or inclined to watch Tesla, there's probably going to be some dipsters that try to step in on this just because it always works. What I want you to watch for is if there's a rally into like 1170 that fails, or say they push it up to push it up into this gap, and then you see it roll over and then drop back below 1170, I think that might be a real interesting short that could give you basically $100 move down here to 1080 because of this void in the chart. So it's going to be a little tricky, just because it will be, because of the popularity of the stock, dipsters stepping in, that whole thing. But just go off the technicals. You've got a clear level right here at 1170 that'll be pretty important on the chart as far as being able to recapture it and move back up towards 1200 and higher. Microsoft. Use 335 as your pivot. You can see it right here. We're in blue sky territory. No natural sellers. If you do lose that, you're probably going to come down to 332 and possibly even 327. Notice here too, there's a little void in the chart here. So if Fatman starts to roll over, you've got some real clear levels here on Microsoft. Amazon. This gap has been brought forward from the daily chart right here between 3550 and 3600. You can see that we've got a big W formation, double bottom. Here's the W. Here's the double bottom low. So on a move above 3550, that will trigger this double bottom structure, and then your target becomes this distance from the double bottom low to this high. So you can add on, let's just call it, it's 3175 to 3549. You can calculate that distance and then add it on to 3550, and that would be your target. And just looking at the chart, that would break us out to new highs. So at a real important point on the charts here on Amazon, and I would use this 3550 as your pivot. Google. Grinding higher into blue sky territory. This 3000 that's going to be a big psychological level. If we break above, I think that's a place where you could definitely be long one as a just a simple technical breakout to new highs. That would be a reason to buy, but also a big psychological level that, could be a Jesse Livermore situation on steroids. You break above, maybe we consolidate here for a while under 3,000. We finally take it out, and then boom, we make a fast run up to a new level above 3,000. So that's going to be an important place to watch if you're interested in Google. Netflix. They pulled the rug on this thing. But what I want to point out is the technical structure. Look at this beautiful double top. It's really just the opposite of what we just looked at on Amazon. We have a high here. That was an all-time high with PPO momentum here and here. We have a pullback, which is fine to support, all well and good. Then we come up to the top at the same level, put in this little indecisive doji, but look at the posture of momentum at a much lower level and RSI at a much lower level. Bearish divergence comes back down here and takes out this this low, and then the floodgates just opened up. So really in a bearish kind of intermediate posture here. I'd expect some support at 640, but if not, probably going to come down here and fill this gap and come all the way back to 625, where you can see that there was a lot of support at that level. At the opposite end of the spectrum, we've got semiconductors, which tagged 300 on Friday. And you can see you've got this 300 level. Same exact thinking for semis as for Google. What I mean by that, 300 is going to be a psychological level. You know, that's a Jesse Livermore level. You know, 100, 200, 300, round numbers. Maybe we consolidate here or pull back, but you get a break above 300. I think you want to be a buyer there. And, I mean, just look at this explosive move off of 279 or so. And just remember that thing that I say, after hard trading comes easier trading. We wrestled back here in this consolidation range, and you can see how compressed it's become just because of the way the charts are. But we had the double bottom low. We had the projected move. We had the big breakout from the daily range, which we said was 35 bucks from 260. We had 295. If you go back in the videos, 6 months, we had 295 circled as our measured move target on the daily chart. And so mission accomplished as far as that goes. Now what I would expect is, like I said, either some backing and filling or just a period of rest. But if you get a breakout above 300, like we saw in Microsoft, that was another one that raced up to tag 300 and then fell back. If semis can break out above 300. That was mostly driven by NVIDIA had an insane day on Thursday and Friday, and then AMD as well. So a lot of those semis just blowing it out. So, okay, got a big week ahead. Can't wait to get into it. I hope you found the video helpful. Let's wrap it up here. This has been Chris Buss with Traders Profit Compass. Talk to you next time.